All right, Richard, welcome to the channel. I'm glad to have you, and let's geek out and talk about Huami. Once again, our disclaimer or my disclaimer, this is not investment advice. Just talking about my private positions, my views on companies and investments I make. You need to do your own due diligence. What we are talking about today is in no way investment advice. I bring you onto the show, Richard, because I think it would be interesting to learn more about your views and check them back with my personal views on the topic of Huami, but maybe also investing in healthcare in general and your experience to that. So yeah, why don't you give us an introduction to who you are and what is your background regarding investing in healthcare?
Sure. So thank you for having me, Marcel. I've been an avid listener of your show, and I think that you've done a great job in covering Huami so far. So for a bit of background on myself, I'm currently an analyst at Luca Capital. It's an investment firm based in Ohio that manages separate accounts for clients. And prior to joining Luca Capital, I worked as a technology consultant at EY. I graduated with a bachelor's in commerce from Queen's University in Canada in 2019. So for like my personal investment philosophy, I look for exceptional companies with growing moats, visionary management, and in industries with very high secular growth. And that's what really led to my focus on SaaS and health tech specifically. So for like more of my research, your listeners can follow me on Twitter at Richard_Chu97. And I say like for what really got me into health tech specifically, which is an area that I really focused on this past year, is because I was originally attracted to Livongo Health for a number of reasons. I worked at a health tech startup back in university. I have a friend who runs sort of very similar startup as well, focused on mental health. And Livongo, it really stood out to me at the time because of its very high growth rates. And I felt that after looking into the company, it was very well positioned to help to reshape healthcare. And after following its journey, as well as its recent merger with Teladoc Health, I was able to get sort of a good or develop a better understanding of where healthcare is going. And that's what really led me into like looking into Huami as well, because I think that it fits in very well with the whole thesis of remote monitoring, which we'll cover in the future. I feel that like overall, COVID has really accelerated the shift to embracing health tech solutions like Livongo, like Teladoc, and it will potentially, if the direction that given the direction that Huami is heading, it really opens up a huge opportunity for them as well. So I feel like this is an industry that everyone should pay attention to.
Great. Yeah, thanks for sharing. Maybe you can give us a little bit more of a background, like how you invest. And also, I've reached out to you because I also saw like what you wrote about Teladoc, for instance. And obviously, that's not in my scope. But so far, I think it's also interesting to get your perspective in terms of how you invest and also what you found interesting about this company, because just this little bit of a background, but I also saw the merger talks about Livongo and Teladoc, and I thought like, well, let's find something similar to that in China. And so far, it has resulted in my investments in Baidu and Huami.
Yeah, sure. So in terms of how I invest, again, like I really look for very exceptional, high quality companies with very large addressable markets. I look for high quality management. I have a big checklist that I post on my Twitter. It really goes into depth about like what I look for in terms of high revenue growth, high gross margins, making their way to profitability. And then I really want to look for companies who are also able to really grow their competitive advantages over time, and with the right vision and management to get them there. So in terms of what attracted me to Teladoc, and sort of to give you an overview of my whole thesis, it's not just sort of based around the fact that it's a telemedicine provider. It really goes into depth about how I think that currently the US healthcare system is broken. So right now, the country spends more on healthcare than anyone else in the world, but they aren't seeing the same level of outcomes. So actually, there's this statistic that 25% of healthcare spending is considered waste. And 25% of the $4 trillion that the US spends each year on healthcare is going to be a huge, massive opportunity for a number of these players to really redefine how care is delivered and sort of eliminate the inefficiencies. And I really see that Teladoc is well positioned to do that. So to give you a background on Teladoc itself, it's a leading telemedicine platform. So it connects patients with providers over virtual calls. And they currently have around 51.5 million paid members in the US. And they have a network of over 55,000 physicians. So I think that they are currently targeting like a number of different channels. They're targeting employers. They have over almost 50% of the Fortune 500. They're also targeting health plans as well as health systems. So like you see like hospitals, they're adopting Teladoc as well because they have a white label solution. And it's only very recently with their merger with Livongo that I became really interested in what they had, because I was an investor in Livongo. To give you a background on Livongo, it's this remote monitoring company. So what that basically means is that they have connected devices, which they give to people with chronic conditions like diabetes, hypertension, for weight management, as well as for behavioral health. And they use those to really track and gather data on their health over time and intervene using AI-based nudges. So like things like, oh, like your blood glucose level is a bit low. Why don't you go and drink some orange juice, stuff like that. And if it gets out of range, they pair you up with a health coach who is assigned to you, who knows like everything about your history, and they'll look at the data and they'll suggest you to do some things as well. So it's really helping to empower patients to better manage their own health, better manage their own chronic conditions. And if you have that paired up with Teladoc, because they recently merged, then it really opens up the opportunity to really, instead of having that one-on-one based, like, I need to see a doctor, so like I'll go to Teladoc. Instead, you're going to be having this device which tracks you throughout your entire sort of patient journey. And it informs you that like, hey, like maybe you should see a doctor now because your glucose level is a bit too high for the past couple of weeks. Maybe something's wrong. So it will like really create this preventative healthcare system, which is going to save a lot of costs over time. And I think that mainly like the reason why I didn't invest in Teladoc before the merger was because Teladoc itself, as a telemedicine company, it's focused on improving access to care, right? So it doesn't really matter like if you are going to move sort of a regular checkup from like the in-person visit to online, you're still going to be spending like the same amount of time with each patient. Like maybe you save some time between visits, maybe you reduce like some no-shows, but you're still going to be spending the same amount of time with each patient. But if you have something like Livongo that really tells you when and where and what kind of care you're going to need for the patient, then it opens up the opportunity to really reduce the amount of visits that are required, sort of reduce the in-person visits to the hospitals, really move sort of the hospital into the home, which is the analogy that they used. So I think that opens up a huge opportunity to reduce the healthcare spend in this country and globally as well.
Great, cool. And so Teladoc's now your largest position, or when have you entered? How's it going so far? And what's driving the valuation of this company in your views?
Sure. So I started a position in Livongo in September 2019. That was shortly after the IPO. And I've held that for over a year. It's done incredibly well. And it merged with Teladoc in last October, which was the merger date. And since now I have a significant position in Teladoc. So it's like almost 40% of my portfolio.
Great. Awesome. All right. Let's talk about... Sorry, yeah, go ahead.
Yeah, sorry. Like I think your second question was like, what's really driving the valuation?
Yeah, exactly. Yeah.
So like in terms of like the company itself, like I feel like it's currently at a quite reasonable valuation if you compare it to like peers like Amwell and such. I feel like it's quite undervalued because the market is currently really perceiving it as this COVID play, this company that has significantly benefited from COVID, that is competing within telemedicine, which has hundreds of different competitors. It's becoming more and more commoditized, and it doesn't really have this moat because it's been continuing to acquire these companies, which isn't sustainable. But I don't think that's the full truth because, like, first of all, it's grown very, very well throughout the past decade. Like I think like they have like a 70% something CAGR over the past like 8 or 10 years, and with sort of its mode itself, like it's alone in its capability to help to improve the healthcare system because again, like other companies, they may have like one thing, they may have remote monitoring, they may have telemedicine, they don't have the full stack. So because Teladoc has the full stack, because they have relationships with each and every component of the healthcare system, then that's very hard for them to replicate. And that's why they've been on sort of such a huge acquisition spree, is because they really want to sort of acquire those relationships, which are very, very hard to build, and continue to build this comprehensive one-stop shop for virtual care.
Mm. Yeah, that's a great description of something, well, similar that I've seen in Huami, actually. So now let's talk about the Chinese market and Huami. And maybe first, if you look at the screen, my views on Huami here as an ecosystem, that's actually my investment thesis. And I believe you've seen some of the content I've been doing around Huami. So for me, it's not a smartwatch manufacturer or provider. That's not the reason why I'm looking to invest. So it's rather also hopefully this ecosystem that they're going to establish. And obviously China being a super interesting market in terms of the size of the market and also the opportunity and also the extent of the problems, right? So I think whoever is positioned in this market should have a really interesting position in the future to hopefully make gains on that. And what I see here is at the core, hopefully the health data that Huami is collecting through their devices regarding, for instance, sleep, but also sports activities and stuff like that. And then through their subsidiary Pi Health, which is also the algorithm which they've implemented into their smartwatches, the connection to both the insurers, the employees, or to the healthcare industry in general. And then we see lots of projects which we can talk about also later in this call, for instance, in the area with other businesses, but also with universities. So pretty academically driven as well. That's the biggest scope of the picture of what I'm seeing here, different revenue streams hopefully unfolding in the future. And ultimately a really low valued company. So how does it kind of fit with what you're looking at when you first started looking at Huami?
Sure. So definitely I think that one book that really sort of provides clarity on sort of the wider vision is a book called The Patient Will See You Now. And I read it in terms of my thesis on Livongo. So it's by this health visionary called Eric Topo, and he really paints this vision of the future of healthcare, where he actually makes this interesting comparison to the printing press, between the printing press and a smartphone, in terms of democratizing knowledge. So before the printing press, the percentage of people who could read was in the single digits. And it's the same story today with the number of people who actually understand and have their own medical data. So you have like everything, like everything healthcare related, most people rely on their doctors to do for them. But the healthcare system right now, it's not sort of very, very efficient in terms of like cost, in terms of like everything, and wait times and such. And you're going to see in the future that a lot of the center of gravity in healthcare is going to move from the hospital to the home, from the provider to the patient. So as stuff like wearables, as stuff like Livongo's connected devices, as you have stuff like Huami smartwatches, the data that they're going to be able to collect on you, that's going to help empower you to really sort of manage your own health. And with the help of stuff like AI, which could potentially to help guide you and help make sense of that data, then it really sort of could realize this vision of a preventative healthcare system.
Mm-hmm.
And so I think that the main thesis behind Huami is that it plays a very important role in realizing this vision because of the data that's able to collect. Now you have Livongo, it captures data on chronic conditions,
Mm-hmm.
but in order to have like a full sort of suite, you really need to also have the data on regular people as well, like people who don't have chronic conditions. And I think that for sort of the smartwatch itself, it collects data on sleep, it collects data on activity, it collects all this extra data that could then feed into something like Livongo, could feed into something like Teladoc, to help you to help you to make sense of it by perhaps saying with AI pattern nudges, or perhaps upgrading to physician's visit when necessary, and the physician can sort of see your data and then try to make sense of it as well. So I feel like it's mining all of this data that it isn't being used exactly, and by being like a smartwatch maker, like you see Google acquiring Fitbit, and Huami right now, it's in a better position than Fitbit, I think, because it really attacks sort of the low cost segment, getting the smartwatches to as many people as possible. And it therefore presents a huge sort of source of data that could be very attractive, not only for potential partnership with health systems with someone like Teladoc, but also as an acquisition target for someone like Apple.
Yeah. And is it your first investment in a Chinese company?
So I typically don't invest that heavily into China. It's just hard for me to get sort of the conviction or get the in-depth understanding. So yeah, it's currently the only Chinese name in my portfolio, but it's I have made investments in China in the past.
Okay. And how big is it in your portfolio?
It's like 3%.
All right. Okay, cool. Right, interesting. So you may have seen also my interview with investor relations. Anything that changed your views on that afterwards, after watching it, or what was the most surprising insight you had coming from that interview?
Yeah, so I think that the one really key insight that I got was that he said that Huami designs and builds their own chips and sensor array. And that's not only important because of the fact that, they do it because it keeps all the data consistent. Like you have the same high quality data from any single one of your smartwatches. He mentioned Fitbit, which in their lower sort of cost devices, they don't have the same high quality heart rate sensor. So because they have the same quality chip and it's made by themselves, it's all vertically integrated. So because they make their own chips and they're able to then sort of put them in sort of all of their devices, I think that really goes to show that they are definitely serious about potentially doing this health services opportunity in the future, where they could potentially monetize that data to a greater degree. So it really goes to show that the founder, also the Brad mentioned that the founder Wang, he has the most skin in the game of anyone in the company in terms of his insider ownership. And I think that that really goes to show that he's in it for the long run. He's not just thinking in terms of the next earnings report or the next quarter. He's thinking in terms of where's Huami going to be in 10 years and how are we going to get there? So I think that that really goes to show the long-term vision that he has. And that's something that I want to be invested with.
Yeah, exactly. And I think maybe that's also a really important message to the viewers, because I think we both have this kind of a really long-term outlook on this investment. It's maybe not some of those newer growth stocks that are really sexy in that kind of views, but it really is a long-term play. And this also is kind of hard to stay invested and stick with it, because frankly speaking, after the Q2, Q3 earnings and so on, Huami had some difficult times if you just look at the chart, right? So how do you invest in it? Do you kind of buy from time to time, or did you buy just one chunk in the very beginning? And what are your goals with it? What's your exit plan with Huami? And at what point in time would you, for instance, also after a quarterly report, decide to maybe trim your position or to buy more? How do you handle it?
Yeah, so for me, like I averaged into the position. I bought like small over time, and that's usually how like I build a position up over time. So I start to like I always start by buying a little if I like it, and then over time, if the price becomes more attractive by itself or relative to my other opportunities that I have at any given point, then I start to add new cash into it. And over time, like as sort of this story plays out, because I think that right now it's still like quite speculative in terms of like, are they really going to be able to realize this health services like revenue stream? Like as Brad mentioned,
Yeah.
they don't expect to do so anytime soon. So it is like a very long-term story. But I think that at the same time, like I will continue to add as they are proving themselves, like as they are showing that they're continuing to execute on not only sort of the health services opportunity, but making sure that their fundamental business stays consistent. Like they've done very, very well up until 2020, where they've consistently maintained growth rates around like 30 to 50%. And this year, like again, like they're affected by COVID, but just like the recent sort of gross margin deterioration, just like the sort of revenue guidance, it like doesn't paint that great a picture. So I want to see that sort of clear up a bit before I continue to buy more.
Yeah, I mean, it's been really clear in the recent earnings report that they are having some challenges on internationalizing, on introducing those new brands and products. So it's certainly having some impacts on the margins and so on. I also invested in the beginning because I thought it's really hard to find a growth company that is at the same time profitable. It's really hard to find in the markets. And then at the same time, they don't have a really high multiple on it. But definitely also with those challenges recently, I think it will also be harder for them in the short term to improve on the stock price, I guess. So what's your takeaways from the recent earnings calls? Like, for instance, the Q4 guidance, what are your expectations, or also the outlook for next year?
So I think like you, I was a bit disappointed in terms of the gross margin deterioration. And I think that really the main cause behind that was sort of the new sort of Huami, the Xiaomi band launches being lower gross margin than previous editions. And I think like that's sort of a major risk to this company, because they get like what was it, like 70 something percent of their total revenues from Xiaomi, from their Xiaomi partnership. And I know that they've extended it for the next 3 years, but if sort of Xiaomi continues to have leverage over Huami in terms of pushing down sort of the margins that Huami is able to take, then it could be a potential issue for them. I know that they have consistently, like especially recently, they've been very on point with their product launches. So they've launched their new Zepp brand, like they have launched sort of the new Amazfit, like the new GTS watch too, as well. And I think that over time you're going to continue to see more and more of that taking up more and more of their revenue, which is of course going to improve their overall gross margins. So I want to see that continue to improve. Like I think that definitely it's possible, but like overall, like I think that definitely next year's guidance is going to be sort of the key point to watch. Like you, like I'm hoping that they like sort of announce at least something sort of consistent with this year, like 30 something percent revenue growth, and I think like their current multiple right now, it's like around 0.5 times EV to sales. So extremely cheap, especially when you have Fitbit, which is at like 1.2 times. And Fitbit isn't as attractive because they aren't even profitable, and they don't have as fast revenue growth. I think like they aren't exactly having sort of the same kind of opportunity in health services that Huami has right now. They don't have that kind of same vision, I think, from the start. So definitely there's room for Huami to continue to catch up on like a multiples basis. But like, if you like look at sort of the TV manufacturers based in China, if you look at like stuff like Hisense or like Skyworks, TSL, like TCL, then like the valuation is about in line with Huami, like maybe a bit lower. So I don't think Huami should be valued like that. I don't think it should be valued as a commoditized hardware manufacturer in China. I think that it should be, there's definitely room for it to re-rate as a medical device manufacturer, in which case, of course, it would see its multiple expand significantly. But I think that doesn't need to have like a 4 or 5 price to sales multiple in order for it to be successful. It just needs to maintain its current multiple and continue to grow revenues out at the rate that it has historically.
Yeah, I think those kind of low valuations are an issue with most of the Leijin companies, like the founder of Xiaomi. Xiaomi itself is also a play which just recently just gained a little bit of traction. But it's also one of the reasons actually why I invested in Huami, because it's very isolated in terms of a pure healthcare play, or at least smartwatch play in this regard. So it's really good because, for instance, Xiaomi has so many different product lines. It's really hard to value as a company as well. But definitely agree with your take that even, and I think that's been one of my business cases here, like the market sizes, if they grow over the next 5 years to those 640 million units, if they keep the market share like they have, this alone should, really push the share price already. But then there's the second angle around, and I want to get your take on that, the positioning, and also in terms of the average sales price. They have now introduced those new brands and watches, and I'm expecting that actually the average sales price is coming maybe to a level then even similar to Fitbit. But at the same time, that might be dangerous, right? Because you also mentioned like how they are nicely positioned with those really mass market attitude that also enables them to really scale into those lower tier segments. So what's your view on average sales prices and thereby increasing revenues over time?
Yeah, so like I think that there's definitely room for them to push up the average sales price, and that really comes as a fact of first of all, like they are going to be selling like their own high margin Amazfit brand. That brand is going to form a larger portion of their revenues. I think that they guided for in at least the second quarter or sort of the second half of next year, of this year actually, that they expect like a rebound in terms of their gross margins. So I think like that's definitely going to be something to look forward to. But they also need to like their profitability has been slipping a bit recently as well, because they've been spending so much on R&D and marketing costs. So I expect like over time, like right now is the time for investment, right? Like over time, like I expect them to really be in sort of a good position to take more share. And the reason why I expect that is because as they build like not only like their brand power, like they're using Xiaomi to like right now get sort of the revenues to help them build their own brand. But then like once they get that brand power, then they'll be able to continue to maintain like their pricing as well. And as the technology improves, then the smartwatches, like as a category, it will continue to have more and more use from not being just like this gimmick where it's just something that can do what your smartphone can already do, but on your wrist. Instead, it's going to be realizing the opportunity of being this this medical device that you can really track your health over time.
Yeah, I think that's actually a good point, which was quite underrepresented in the latest earnings call, that Huami actually, they gained market share during this Corona crisis in 2020. And if you compare it to those competitors, but management was not really communicating that. I think that's also an overall issue, but maybe also with Chinese companies in general, that they're not really outgoing and, communicating their vision and not being pushy on the markets, which I think also, coming back to the interview with Brad, I think it's perfectly fine to do that and have this kind of more conservative approach and work in the background, and later on, once the numbers are there, go out and be more bullish about it. So I think that's also one of those outcomes from the talk with Brad there. So that's also fine in my point of view. But still, as an investor, it's really kind of hard to grasp this opportunity and also get verified all of the time. Once again, am I on the right track here, or is Huami maybe really just another wearables manufacturer that you just pointed out correctly is actually priced the way it should be based on industry comparison? But once again, if you compare it to Garmin, Huami, or also have of course, the bigger picture here with Peloton, I mean, there's so much room for improvement. And coming back to the different revenue streams, there might be B2B, there might be services, there might be software around it. So it's really still a very complex and early stage environment, in my point of view.
Yeah, and I think that like you point out Peloton, and I think that really sort of Huami isn't necessarily going to be sort of something like the Peloton of China, but it's going to be like, I get that they have their own smart gym, and they also have like their like not just like their smartwatches, like they have like their own earbud line, they have their own sort of treadmill line, and they're all connected, right? So I think that really sort of the key behind that is that it's going to have the data from all of those different devices, and they're going to all be standardized.
Yeah.
So it's really important to ensure the same quality of data. And I saw this thesis that Apple is like the operating system of health, like you're trying to be the health OS. And they are going to partner up with someone like Peloton. They're going to partner up with other people to then extract that data and then put it into something like Apple Health, which is going to be the home of all of the data. But then like Peloton, like they aren't optimized for that, right? Like they don't have the same kind of chips and sensors that Apple does. So it's going to be a work to standardize it. But like Huami, they're in the position to do that because they not only have the smartwatch, they also have the like earbuds, treadmill, like all on standardized data. So I think that that's a key point.
Yeah, and many don't understand that they actually own this data. It's not even Xiaomi who's having this data, because Huami is not only manufacturing the devices for Xiaomi, but they keep those data streams in their own warehouses and working together with universities, for instance, like the Dr. Fauci of China, in order to make sense of it, obviously in an early stage, but still, this is a huge asset, which in my view, Huami is creating there.
Yeah, and I think like they have already done like a number of studies. So like they've already partnered up with over 20 institutions in both China as well as in the US. And they're doing studies. Like one study even showed that they can help predict COVID using like the smartwatch. And like there's been other studies in the US involving all types of different wearables, like I'm wearing the Oura ring right now, and they're like it's been proven to like help potentially predict COVID over time, and by checking in on your body's temperature and heartbeat and whatnot. And so I think that over time, like you're going to see governments continue to leverage the data that's been able to collect it from the wearables in order to potentially contain something like COVID in the future. So you're already seeing governments like Singapore partner up with Apple and Apple Watch to motivate people to like stay more active, like stay more active. And you're seeing like Germany, you guys have like this sort of like I believe program where you can contribute the data from your wearables to the government to help the government like track the spread.
Yeah, yeah. I made this moonshot basically talking about like how insurances could potentially in the future take this data and hopefully, yeah, improve, for instance, the premiums and stuff like that. Do you have any like? I think you possibly have a deeper insight into the industry, like how companies, or as you just mentioned, governments could actually work with this data. So who will Huami, in your views, ultimately be selling to, or what's the proposition there?
So I think like you see it like in a number of ways, and I think a good example would be Apple's partnership with Aetna. So Aetna is insured in the US. Apple's partnered with Aetna to offer free Apple Watches to people under the program if they meet certain criteria on the Apple Watch. And the reason why they do that is because obviously if people stay healthier, then they don't really need to go into the hospital as much. They don't need to really file as many claims, and it reduces the burden on the insurers, on the self-insured employers. And these are the people who have the long-term incentives to want to make you healthier. Also, like increasingly health systems in the US, like they are moving towards this value-based system where they're being reimbursed not just on the services that they provide, but also on the quality that they're able to provide it for, as well as the costs to make sure that they aren't exceeding like certain cost levels. And I think that they're increasingly partnering with Teladoc to help them enable that. Teladoc and Livongo. Potentially in the future, you could see something like Huami or like the smartwatches being used by hospitals, by health systems to give out to their patients to help them to really track their health over time and to really intervene only when necessary. So I feel like definitely it's a huge opportunity for them, but near term, like I expect them to really sell to these insurers. And I think that Huami, like they also have their own registered brokerage in China as well. So they can potentially partner up with insurers there. And like under the insurer's plan, like they mentioned something like shared savings. So they could potentially benefit from the cost savings from the reduced number of patients who are going to the hospitals, who are like thus saving money and taking a portion of that for themselves. So that could potentially be some possible monetization avenues, in addition to again like their recent partnership with Proximo. And with Proximo, I think like it definitely benefits both parties, where Proximo gets this distribution channel via Huami smartwatches, and Huami again like they get the potential for improved MRI technology.
Yep. Yeah, speaking of this great example to go deeper, so Huami shares were actually jumping today on some news that after Huami announced in December that they're going to partner up with the company you just mentioned, Promaxo Technology. They now today raised around $4 million led by Huami, which is interesting to see. So yeah, what are your views on this deal? So this is one of those B2B initiatives by Huami, I guess.
Yeah, so like I feel definitely it's a great idea for them to continue to work with Proximo. I feel like Huami can contribute their miniaturization expertise to help Proximo's technology potentially be incorporated within some form with the smartwatches, right? And I think that really speaks to sort of the democratization of healthcare that I mentioned earlier with Eric Topo. So like, if you have this MRI technology, which was traditionally restricted to the domain of hospitals, where you have to go into the hospital and you have to pay thousands of dollars just to get an MRI scan. But now you can potentially have some variant of it in a wearable. And I think that, or like something potentially similar to that. And I think that that not only opens up opportunities to save patients money, but also to potentially democratize healthcare, not only in the US, but also worldwide in developing countries.
Yeah. And I think, yeah, it's really interesting to see those early stages of this kind of B2B deals that are trying to do here. And I think Brad also mentioned it in the call that they have now somebody on the ground in the US trying to make those deals. And we should listen to it. There's more deals coming out, so expecting more on that. And it kind of, this is all what we see as investors from the far out, that they are kind of seemingly really executing on that. Another one, I think, was about, I found that one really interesting here. Let me check if I have the right article here. Yeah, that one. DSM and Huami Corporation are partnering on personalization and health monitoring technology. So DSM basically is a company that's doing health nutrition, and they're using Huami's data, maybe just in a very brief prototype or small study, in order to come up with new products and services. And that's interesting in my point of view, even though if there's no revenues attached to it right now. But such kind of news, I've never seen it anywhere before. Have you?
No, I haven't seen that press release either.
Okay. So it's super interesting in my point of view, because so basically what this unlocks is that in the future they might actually be able to sell the data that they have from their devices, for instance, even to nutrition producers like Nestle or so on, Kraft Foods, who knows, in order to keywords, personalized food and healthcare, obviously, which is getting even more important also for those food producers, I would assume. So I have no idea how well these kind of corporations and partnerships could work, but I really imagine that in a distant future where you can use all this data and algorithms in order to come up with personalized food, that would be quite an interesting new field to explore. And just seeing that Huami is kind of positioned there as a provider for the data is, in my point of view, although this seems to be quite early, really an interesting take.
Yeah, I feel like Huami definitely has the ingredients to do so, and that's like ultimately what underlies my investment in it. And I think that if they do execute, then this could definitely be the highest potential returns of any investment in my portfolio. So I think that given like their current valuation, given like the massive addressable market ahead of them, if they're able to execute, which I think like definitely like they are going to be able to have a slice, considering the fact that they have like 26% share of global shipments of smartwatches last year. They have a founder who thinks long term, who is visionary, and I encourage everyone to read his open letter if you haven't already. I like and definitely like given like the industry tailwinds, it's something that I'm very excited about personally. And like I like to sort of make sort of the comparison in terms of like Huami, like most people may think of it as a smart watchmaker, when it is in fact going to have the potential to be this larger sort of healthcare platform, this in their own words, form this global healthcare ecosystem. And you see like stuff like for example like Tesla, like the Trojan horse was the car itself, right? Like the car itself collects the data for their own self-driving program. And you see stuff like Roku, like you have the Roku stick, but that's the Trojan horse for the ad platform where they make most of their money. You see stuff like Peloton, like they have the bike with an iPad, but like the bike with an iPad is the Trojan horse for their subscription revenues. And Huami right now, I think the Trojan horse is the smartwatch. And I think that over time, maybe not next year, maybe not within the next couple of years, but over time, they're going to definitely be in a great position to have the majority of their revenues potentially coming in from the health services opportunity.
It's really great summary, actually. But maybe thinking as a critical investors, what could go wrong, or what would be breaking points or showstoppers in your view?
So I think that definitely the risks are that their fundamental business deteriorates from the increased competition, as well as from the pressure from Xiaomi. So I want to keep track of their gross margins over time. Of course, it doesn't really matter quarter over quarter, but I want to see it improve over time to show that they are indeed having sort of some kind of leverage, as well as really making sure that, like given their competition, maybe they don't compete directly against Apple, but Apple's a huge competitor who is also attacking the same opportunity as them. You also have the other low-cost smartwatch makers like Huawei, so Samsung as well, and I think that definitely they could potentially steal market share in the future. Like a core smartwatch, the problem with it is that it's good. It has like tremendous battery life, but it's not something that makes you go like wow, like something like Tesla, something like Peloton. So I've seen there are some concerning reviews on sort of the product, perhaps like the battery life dying too quickly and stuff, and like there's some issues with the app as well. So these are all things that they can fix, but it is something that should definitely be watched.
Yeah, I agree to that. And maybe just jump in this last example here, which was kind of, I cannot put it together right now in how this fits into the puzzle, but Huami enters an agreement with Jiangsu Yitong, which is kind of a TV producer in my point of view, like in the first on the first looks. But so what are your views? How does it fit into the picture? Maybe my explanation for it would be that they could somehow cooperate on the manufacturing of products, but what I would rather like to see is possibly something in the area of also software, because I think that's also where they have some competency, and where I think Huami is frankly, you just mentioned it's having some negative reviews, and maybe they have like a weak spot there. And then also you were talking about like telemedicine and like remote monitoring and so on. So maybe that might be an angle to combine something. I mean, this is all speculation. It's quite new, and we didn't see much more information on that. But what would be your take on it?
Yeah, so I'm currently trying to figure out sort of the reasoning behind sort of the stake as well, and there hasn't been that much information on the company online. So yeah, it's definitely strange, because from what I read, it's they're like a broadband TV equipment manufacturer. So why would Huami want to partner? Why why would they want to acquire a stake in them? So it's something for me to definitely research into further, but I think that I would have to wait until next earnings call to really get a clearer picture of what they do. And I think in terms of telemedicine, definitely the potential for the smartwatch to potentially integrate with something like Teladoc, where you can potentially have the smartwatch, as it detects that you need to see a doctor, perhaps that it can definitely pair you up with a doctor right at that point. And maybe they can even partner up with Xiaomi's phones to have that same kind of linked kind of ecosystem. But it's definitely something to watch.
Yeah, I was actually hoping that they somehow partner up or even get acquired by Baidu, so that would be similar to the Google.
Yeah.
But on the other hand, I would be unhappy about that, because then my investment in Huami gets eaten up early. But on the other hand, I see that Baidu also wants to get into healthcare, so that's kind of my second play on the healthcare market in China, and definitely interesting, because they have this AI capabilities. They have definitely a good software team and so on. So would be interesting to see some synergies going on there, but so far this seems quite out, and that's only speculation for now, but I definitely see a potential there in the future. All right, so thanks, Richard. I really enjoyed the conversation with you, and I think this remains a really interesting topic and investment, and we should certainly do this again. And once again, please tell us where we can follow up with you and what you are doing on Twitter or with your blog and so on, and how can people reach out to you and ask you questions?
Yeah, so people like that, like definitely, you can follow me on Twitter. It's again at Richard_Chu CHU 97, and like definitely you can check out like our fund as well, Luca Capital. You can visit our website. It's just Luca, so like LUCA, and then cap, so CAP.com, and then you can check out like our different strategies that we offer. But besides that, if you want to contact me, just feel free to DM me on Twitter, or you can like definitely go on our fund and sort of reach out from there.
Awesome. All right, then have a good evening, and thanks again for coming on the show.
Yeah, thanks for having me, Marcel.
All right, see you next time. Bye-bye.
Bye.